Good evening. It's Vijay here. Today is Sunday, 13th June 2025. Welcome to a weekend reflection session of the markets. Here we discuss what is likely to happen in the near future. It's not a day-to-day commentary which I do on 5 days of the week. Now, yesterday I was in Mumbai. I had a very productive two sessions actually. The first one was with the Jamnalal Bajaj alumni who deal in stocks and shares, that WhatsApp group led by Mr. Vamsi. We had presentations, and I also gave a presentation on the topic why bulls will not make money even at 30,000. I also had another very interesting interactive session with friends of Swet Shah, who was my host in Mumbai, and we had about 7 or 8 people, and we talked about markets ahead. And again, I talked about the same topic: why bulls will not make money even at Nifty 30,000. It was it's a very controversial headline. But before we go to that 30,000, whether bulls will make money or not, first of all, the question arises whether the Nifty itself will go to 30,000. Today, we are stuck at 25,500. People are bearish, people are nervous, and people are expecting it to go to 23,000, 22,000. Some people are expecting 18, and the Parma bears are expecting 12,000. And they continue to expect it from the last 3 years. Now, in such a case, first of all, the question has to be answered whether Nifty will go to 30,000. And then we have to answer the question whether bulls will make money at all. Personally, I believe that there is a very high probability that Nifty will go to 30,000 before the budget of 2026, notwithstanding some black swan event. If there's a black swan event, then bets are off. But I believe if you don't have a black swan event, anyway, black swan event, we don't know what the black swan event will be. We cannot define it. We cannot know the magnitude of it. Whatever it is, I feel independent of if there's no black swan event, 30,000 is well within our reach. And I will explain to you why it is within our reach, and I will also tell you why bulls will not make money. Okay, so you'll have to go back to history, and history says those who do not remember the past are condemned to repeat it, because what I think will happen in the future is probably going to be a reflection of what happened in the past. At least it will rhyme. So now let's dig deeper. So if you look at where the Indian bull market, actually modern Indian bull market, started in 1991, when there was a lot of pessimism because Rajiv Gandhi was assassinated and gold was pledged with the Bank of England. We had only 3 weeks of forex reserves, whereas Sri Lanka had got about 4 to 5 weeks of forex reserves, and they considered it a bankrupt economy just 2 years ago. So we had only 3 weeks. And the prospective PM, which was Rajiv Gandhi, was assassinated, and then the mantle fell on a reclusive PM who were not even stood for election, Mr. Narasimha Rao. And come at the hour, come at the man, they said, and then things really began to unravel in a very positive manner in 91, from July onwards when the budget was presented. So we had Sensex, Nifty was not there at that time, NSE was not there. So we had Sensex of about 1250, it went up to 4,500 in a span of 9 months across all sectors. And the fun part was that things were not getting any brighter. The budgets had come, two budgets had come in between this rally, but they were more of policy documents and what will happen in the future. But the market had discounted them so well that the market had got that confidence that things will only get better. Of course, it was helped by the stealing of money by Harshad Mehta, but nevertheless, the macro news was bad, extremely bad, and yet we had a 265% rally. This is the biggest rally in the shortest span of time in the modern Indian market. Then if you see Harshad Mehta in 1991, he was the kingpin. He moved around in Lexus. In April 1992, the market peaked out and he got into trouble and he got arrested. Subsequently, the market fell about 55% from 4,500 to below 2,000 in 1993 April. So when it broke 2,000, everybody panicked. And if there were technical analysts that time, there were not, because I was there at that point of time. I know technical analysis was not an accepted mode of defining what the markets will do. So they all panicked, because I remember many brokers who are my friends. They came and said market has to close down. It was a Friday evening when the Sensex had broken 2,000. But you see, when there is huge pessimism or huge optimism, that is when the tide turns. And soon, sure enough, it turned from that day, from next day, from 2000, it went up all the way over the next 2 years. By September 94, from not even 2 years, sorry, 1.5 years, from April of 93 to September of 94, the market rallied 132%. In 93 November, the private sector mutual funds came. In 94 January, the FIS came into picture. So by the time we saw September 94, the Sensex had actually crossed the peak of the Harshad Mehta peak. That was 92 April peak. So again, here it had crossed slightly. So again, the technical analysts would have told us, because it's a breakout, so one can go ahead and buy. But lo and behold, what happened is, between 94 September to 99 November, the market moved in a narrow range of 4,500 or 4,000 being the top most of the time, and 3,000 being the bottom. So much for technical analysis. So when we came to 1998, because lots of bad things had happened, we were de-recognized. I mean, we were blacklisted by US and Europe because we had blasted we had the nuclear testing which we did in 98. Then we had governments after government, 6 prime ministers in that span of time, and things were not looking good politically. There was the Kargil war which happened in 99, and generally the scenario was bad economically. Yet the Sensex rallied 123%, what we call the ICE rally or the .com rally. ICE is for information technology, C is for communications, E for entertainment. So these stocks rallied the most. The general category stocks did not rally, but we got a 123% rally in the Sensex. Again, all round bad news. We had a war, a full-fledged war, and yet we rose. Now, if you look at what happened after the .com bust, it fell down after the .com bust. That is around 2000. It peaked out March 2000, and from there it kept on going down for 19 months. It came down 19 months. It came down about 57%. So what we had come down 55% in 92, 93, we repeated something similar in 99, in 2000, 2001. Then for the next 20 months, between September 1 to 2000, April 2003, 20 months, we moved in a very narrow range. And then after that, the great Indian bull market, which everyone talks of as a fantastic bull market, took off from April of 1993. Again, very bad news, because we had the Gulf War II, when the Americans said Iraq has got this weapons of mass destruction. And prior to that, we had the 9/11. We had also the parliament attack in December 2001. And then we had a standoff between India and Pakistan in the first half of the 2002. So again, and then we had a profit warning from IT giant Infosys. Within 3-4 days, Infosys fell 44%. Can you imagine? It fell 44%, and everything was gloom and doom. But then the fantastic rally started. But this rally was not as simple as people make it out to be. That is why history comes into picture. People think that was a very great rally, smooth rally, and all. No. Between 2004 January to May of 2004, the Sensex fell 32%. We have never seen more than 18% fall in the last 4 years. And yet, that time, in a great Indian bull market, we saw a 32% fall. And then in 2005, early 2005, we saw a 12% fall. And then later in that year, we saw 13%. And then mid of 2006, we saw a 30% fall. Between May of 2006 to June of 2006, in 3 weeks, we saw a 30% fall. And then it went up. Then we saw a 17% fall in early part of 2007, and 13%, 6%. So we had number of falls which were, double digit. And we are talking about the great Indian bull market. So it was not easy, because every time in that bull market, everybody said, my God, the market has fallen 32%, so market will collapse. We said market has fallen 12%, so double digit. Again, it may come down to the previous lows. So always there was fear. And when in May 2006, it fell 30% without any real news. There was no real bad news. It fell 30%. People thought that is the end of the bull market. Yet the bull market kept on going. The point I'm trying to say is, psychologically, everybody was looking at a bear market during that time and not a bull market. So only the guys who could conquer their fears held on to their shares. In 2008, for instance, there was a worldwide collapse of the stock markets. BSE Sensex from 21,000, which it was on January 2008, within 10 months, it fell to 7,000. So then you had something called what we call the global financial crisis. So from January 1st of first week of 2008, when Sensex hit 21,200, it finally went and bottomed out around 7,500 by end of October. Again, between October of 2008 until March of 2009, the market was sideways. We had the Satyam scam in between. So it was 65% fall, whereas the subprime problem, global financial crisis problem, started from the US, which fell only 54%. So we fell more than the US. So we thought by 2009 recession had set in, even in India. So we thought they will not have another bull market in our lifetime. But then what happened? From March 2009, the market took off. By November 2010, on Deepavali day, we went and hit a new high on the Nifty here. We hit a new high on the Nifty, which means all the global financial crisis problem had just been negated by the movement of the Nifty and Sensex. So this was what I call a rally on fumes. That means there was no good news during that time, yet the market went up. Something similar to your April 2020 till around September 2021. Not any good news was there. Very much bad. There were lots of bad news, yet the market went up. So that is the kind of moves the market makes, even though the fundamentals are not good. What it means is that if the liquidity is there, then the markets will move up. So that is what happened. This Robinhood rally, 233% in 20 months, in 30 months, went on mostly on liquidity, because global central banks pushed in liquidity. So it went on liquidity. Fundamentals followed. So what you should remember is, in a bull market, the bull markets start on liquidity and end on lack of liquidity at the highest level, because everybody has bought it. So if you see only fundamentals, you will not buy into this market at this point of time, because this is not an undervalued market. But yet we are talking of 30,000. That means about 20 to 25% higher we are talking from here. How can this market go up? The market can only go up if more and more liquidity comes, and that is what is happening. So this is what we said. This is rallying against all odds. It went up from 2007 to 2008 January also, was another liquidity fueled rally. At 2007, we had a seminar by CNBC where they talked of Sensex 15,000 is the peak. Soon after, it fell to some 14,800 or something. And then from there, it went to 21,000. A 54% rally happened in those 7-8 months, when there was subprime and there were all kinds of problems globally. Yet we chugged along and hit a new all-time high in January of 2008. So I'm saying this rallying against all odds happened very frequently in our Indian market. So just looking at fundamentals will not really help you to understand and participate. People did not participate. Even I did not participate in many parts of the rally. But well, I knew liquidity is important, but I didn't know how important it is. So therefore, now you come to where are we in terms of what is the edge do we have over others today. See, if you take from between 80s and 2000, the information and inside information governed the markets. You see, that time there was no CNBC. CNBC came only in late 1999. So you had information only from the newspapers, or you had inside information like the Harshad Mehta camp did this, Ketan Parekh camp did this, or some other operator did that. So that was information. But in 2000 and 2020, with the advent of internet coming into everybody's homes, more TV channels, business channels, and you have Facebook, you have various, you have WhatsApp groups, you have Telegram, but various things. So you had all kinds of analytics also, where you had website which talked of only analysis like screener.com and so many other websites. So if you're good at analytics and know how to capture information, not inside information, you could make money. But today, 2020 onwards, what has happened is the market has changed completely. Here it is on psychology, and you have to have an understanding of history. Because even up to 2020, 2015, history of Indian market was not so much. Now you're seeing every year historical evidence is there as to what happened last year, last month, last week. And so you can analyze it much better right now. And people forget this. People forget history. And that is why they may be condemned to repeat it this time, is my thinking. Psychology. Psychology, you must understand that if there is bad news, if there is something, some Indo-Pak war or Indo-Pak skirmishes which we had, now everybody knows about it. So everybody has the fear. So we should observe what the market is doing. If the prices are bottoming out and going up, which means the smart guys are buying, because they also know that we know that there is bad news. Similarly, on good news also, if the prices are coming down on good news, like last year, for instance, Reliance announced bonus, but yet the market was coming down because the smart guys were selling. Everybody thought bonus is a good thing for Reliance and Reliance will go up because they have great plans and all that, but it came down. So it is not, the liquidity was low in Reliance. People are not putting money. The big guys are not putting money in Reliance. That's what happened. So you should understand the psychology. I'm hoping people who listen to this will understand through this information which I've given. Now let's look ahead and what are the challenges and opportunities. What are the challenges? The number one challenge is the Trump's policies. For instance, there is some talk that tomorrow he's going to put some constraints on Russia, which will include India. Whoever buys oil from Russia will be penalized 500%, they are talking about. So we don't know whether that will come through and how it will come through, whether India will be affected or whether India's name will be there, we don't know. But that is the biggest challenge we have, Trump. Then geopolitical uncertainty. We have the uncertainty which we had, the Ukraine-Russia war. Now then it went to Israel and Palestine war. Then it went to Israel and Iran war. Then we also had a skirmish between Iran and Israel. So we've had a lot of geopolitical uncertainties. So those are challenges and they have not gone. Operation Sindoor has been only suspended. It has not been closed. Then we may have a problem in China, Taiwan. Anything can happen anywhere in the world today. The way the geopolitical scenario is, we should be expecting the worst all the time. Then your earnings growth. Earnings have not grown as good as what they were growing in the past. So we may have less than 10%. A high single digit growth is what we can expect. So a bull market is supposed to work on fundamentals, but then the earnings growth is not great. Then that means the market should not go up. And then you have the greed of promoters. Whenever the market goes up a little bit, they come and sell. So then the prices get depressed. But then let's look at opportunities. These are challenges. What are the opportunities? You've got a stable political environment. We've had, even after the not so great results for the NDA in 2024, it has been stable. There has been no such threat to the government. So that's a very important thing for any bull market to continue. Then you have RBI infusing liquidity. Till Mr. Das was there, liquidity was tight. Now the new RBI governor has come and he is making their system awash with liquidity. Most people don't understand this, that liquidity doesn't happen immediately. The effect will not happen immediately, happen over a period of time. And now that they have opened the taps, which means the water will keep flowing regularly. And that itself will bring in money into the market. And that will be the reason, it's a tailwind for the prices to go up. Now SEBI is awake. They are trying to cleanse up the system and they are aware of what the problems are. There is a news item which says 200 operators are being indicted and they've been raided. So the system will get cleansed. So the bad money will go out and the good money will come into the system. Then look at the government policies. All of the policies today are looking towards expanding the environment, economic environment. So that is another good thing, and they are only increasing it. Their defense spending is increasing, agriculture spending is increasing. You have the PLI schemes coming regularly. Then you have look at inflation. Inflation is benign. Monsoon, good. Then the two most important things for liquidity is mutual fund inflows. You remember in February 2023, all the so-called legendary investors, fund managers came on TV and said, run away from the market. The retail investors will struggle. So it's better to close your SIP accounts, close your mutual fund accounts and go. And these are guys managing our mutual funds. They are supposed to find ways to invest the money. Instead of that, they are saying close. So many mutual funds went into cash. Some of the big mutual funds went into 25 to 30% cash. PMS, most PMS went up to 50% cash, and some of them were proud that they hold 100% cash. Then why should we give money to them if they're going to hold cash? So they're all scared. And there is an enormous amount of fear among mutual fund managers. See, if you look at what was the Nifty and the Sensex in February end and March, when they were most fearful, and today where we are already up nearly 20, 30, 40% in many, many stocks. If they're not going to buy at February, March levels, can they buy at August level, July levels? It's very unlikely. So they'll keep on holding it, and they will, believe me, come in the top, and then they will say it's a great market, and that is the time to be careful. Not now. This is not the time to be worried about, even though the fundamentals are not that great. Remember, liquidity is the mother milk of all bull markets. You forget that, that is history. If you forget it, you will repeat it, where you will get panicky for everything Trump says. You'll get panicky for every mutual fund manager who comes on CNBC or any other business channel and puts the scare of God into us. Now, finally, interesting point here. This is one way of approaching it. Nifty peak ratio, that is whenever the Nifty has peaked out in January 2008, it peaked out at 28 PE. Now, don't ask me what this number 28 is, but it just peaked out there. Even in October 2021, it peaked out at 28. Difference between January 2008 and October 2021 was, in January 2008, we had the standalone earnings were calculated to decide the PE. Now, in April of 2021, they changed it to consolidated. So even in consolidated PE, we had 28. So I am saying that if you go by history, then we should get afraid at a PE of 28. Now we're having a PE of 23 with the EPS of 1111. Again, a strange number. I'm not a numerologist, but I'm only telling you that we are at 23 PE, which is not cheap, certainly. Anything below 20 is cheap. We are not cheap. We were at 20 in February, for instance. And then the earnings are growing. They are not degrowing. They may be growing slow. So as time goes by, even the next 6 months, our earnings will probably go to 1150 or something like that. So the earning PE ratio will be lower at these current prices. If they go higher, of course, the PE ratio will go higher. But even at current prices, if you put a 28 PE, the Nifty will be 31,000. Nifty will be 31,000. So it is eminently possible. Nobody can say definite, least of all me, who has seen ups and downs in the market for more than 30 years. I can't say it will definitely happen. But there is a path, and there can be a justification based on history, based on psychology, based on liquidity, based on fundamentals. So all these in order. If you look at it, the path is there for Nifty 31. It may even go higher, because you see, if the EPS goes up in the next 6 months, then 28p will be still higher. Why should it stop at 28? Why can't it go to 29 or 30? 23p is not a peak in my, I have not seen a peak at 23p. Even last year, the P was September peak, which we had in September end 2024, was more than 24. So we're not even reached that level, though we are very close to the all-time high. We already hit an all-time high as far as the Bank Nifty is concerned. So what I would like to say, this is a long 20 plus minutes, but I think it is worth it. I think one should study it. I am bullish. I'm asking everyone to look at history, look at data, and then take a call. So whatever you do, I hope it is successful. Thank you for joining.